Sound check, 1, 2. Good morning, good afternoon, good evening, everybody. Today is Monday, June 6, 2016, 12:06 Eastern Time. My name is Jerry Furst, founder and director of Investors Education Network, also known as Traders Education Network, brought to you here today on CapitalDiscussions.com. And so what we do with the week ahead is technically and fundamentally we talk about the current markets in the week ahead. We'll be projecting price, time, and volatility on the indexes and some selected symbols. Type in the symbols of your choice if you'd like me to take a look at, and search and employ techniques and methodologies that we may be able to take advantage of opportunities. And we'll potentially be using OptionVue and multiple charting programs and taking your questions and contributions to the conversation. Disclaimer is that no communication, live or electronic, should ever be considered as financial or trading advice, and we don't endorse any specific trading instrument, activity, or other speakers or software outright. I do use OptionVue and TC2000, and so you can take that as a implicit, explicit, or subliminal endorsement, however you want. But that's what I use. Investing and trading involves financial risk and not suitable for everyone. Only trade with money you can afford to lose, and never make an investment decision or purchase a product or service before doing your due diligence. So what I use are all of these components. If you're watching this recorded, you can freeze it and take a look. This is part of my course that I've been teaching. The bottom line really to successful trading is patience, practice, maintaining your psychology properly, and planning. All of that just gets you into a higher probability of success. Nothing will guarantee success, especially in these markets. And so let's go ahead and get to the week ahead, where the first thing that I'll do is I go out to my website, investorseducationnetwork.com, hit the economic calendars, and when I hit that button, I have access to several of the global calendars, one of them being Econo Days, U.S. calendar. And so here we are for the week ahead, which is June 6th to June 10th. The main event this week is going to be on June 15th, next week, where the FOMC meeting announcement is all the rage as to what will the Fed do with interest rates. Now, last Friday, June 3rd, the employment situation was horrible. It was just, as low as you can go is what they might say. Basically, you had about 38,000. That's not my color. I don't know what kind of color is that. 38,000 new jobs that were made, and a revised downward number from the previous month's non-farm payroll, which not that many people work on the farms here anymore, but that's besides the point. Here I can change the colors. How about this one? Look at these colors, man. All right, so anyway, whatever. Let me erase or press and select other options. This is kind of cool. All right, so basically the week ahead here we have, let me see if I can move this over here. All right. Press the right arrow key. Okay. So basically the whole concept is that when it comes to the markets, this is something from Bank of America Merrill Lynch, where basically if the Fed threatens a rate hike, the markets will go down, and if the Fed delays a rate hike, it will go up, and round it goes. However, the concept is that if the Federal Open Market Committee, otherwise known as the Fed interest rate, If they raise rates, that's going to be bad for the markets, right? No more free money. If they don't raise rates, the markets are going to go down, right? Because the economy is so bad, they can't raise the rates. So technically, my personal feeling is that Wednesday, June 15th, they're damned if they do, damned if they don't, and the markets will go ahead and go down in any event. But that's just my opinion. I could be wrong. We could take a look at gold. We could look at the fact that gold, as of non-farm payrolls last week, this is a 5-minute chart here at the lower right. Gold was trading at, stupid microphone here, 1212, and then it spiked up to about 1240, and it's continuing to slowly grind higher up to 1250. So we've got about a 40-point pop in about 24 hours worth of New York trading time. And you can see also oil making a spike over the weekend here. We've got a high of about, what do we got, 49.81. So we're pushing 50, and we have 49.99, 50 as resistance right here. And this is a 5-minute chart. If we take a look at the indexes, the Dow is currently up 100 points, the S&P is up 7.8, and the VIX is trading at 14, is still low by any comparison as far as fear goes. So the Dow's, up a little bit, and the Russell's up a little bit, about 0.6 of 1%. And then we've got the currencies. You can see from Friday's non-farm payroll. Look at how both the euro and the pound and even the dollar-yen spiked. It's interesting how those all spiked at the same time. And over the weekend, you can see that the British pound cratered and dropped, while these other currencies, the dollar yen and the euro dollar, has continued to stay stable with not much of a gap. What we're looking at here is over the weekend there were some polls where Britain is looking more and more as if they're going to exit and leave the Eurozone. And so that's, in the short run, that's affecting the British pound negatively. I would just say stay tuned for you currency FX traders, because we're going to see some pretty wild gyrations on the currency markets. Beautiful volatility, that's what you play. And I do say play. It's interesting to note that the gap up in oil, okay, look at how that gap up in oil occurred at the same time as that drop in the British pound. Correlation, causation, not sure, because you can see that you did have some gaps down over here, 1425, and we did have some other gaps. That was on Wednesday. So you do see that the British pound is somewhat correlated to oil, but depending upon if you're trading commodities or currencies, or if you're in the equity markets, have to conduct yourself accordingly. All right, so let's take a look at the VIX real quick. Not really much to show there. The VIX trading at 1385 is just slightly up a little bit today, and just to show you that we are just sitting here on the bottom of this. This is a weekly chart of the VIX, and you can just see that we're just scraping the bottom of fear. There's really no fear in the market, and so the VIX is low. So you can put that into the concept of, most likely we're waiting until next Wednesday, and you can set yourself up with potential option trades in anticipation of the Fed announcement next Wednesday, June 15th at 2 p.m. Eastern Time. Everything else until then, if you wanted to go ahead and keep track of some of the other interesting things out there in the world, you've got, let me see if I have my other screen here. So zerohedge.com, the fundamental issues out there is Venezuela. The real news out there. The Fed is too reactionary. Bill Clinton's brother's arrested for drunk driving. They'll probably want to access his cell phone a little bit. JP Morgan still hates the market rally. Okay. Let's see if we click on, sometimes if you click on the images, it'll bring up the image. So here we go, global flows into bonds and equities. This is all mixed every month, up and down, huh? So bonds and equities have been really, this is pretty bizarre. So Zero Hedge gives me an interesting insight into the market, as well as unicorns and rainbows and ISIS burning women. Paris becomes a massive camp for illegal immigrants. I'm sure that's going to go ahead and help the British make up their mind whether or not they want to keep up with that nonsense. And the Dow and the S&P erased the entire payrolls plunge. So this was at 9:50 this morning, showing that last Friday's horrific fear of the jobs market, yesterday's news, on with the rally. So Janet Yellen's supposed to speak today. Not much to think about, not much to worry about. And just post your questions as we continue. All right. So with that being said, let's continue on now and take a look at the markets a little bit more closely. And again, for those of you just joining us, this is the week ahead on capitaldiscussions.com. Today is Monday, June 6th, 12:19 Eastern Time. And we're going to be looking now at the charts and for some opportunities. And again, as I look at the live charts, please remember that none of this is an endorsement for a specific trading instrument, activity, or trade. And we're going to go ahead and start using our charts and OptionVue and some other techniques to go ahead and take a look and see if there's some opportunities in the markets for us. So looking at the Dow, you can see that we've got this huge W pattern, which has kind of fizzled out. And so the blue chip, large cap stocks are just plodding along. If we take a look at the Russell, which the Russell 2000, you can see that we've now made it above this trend line. This is a weekly chart over on the right, the daily chart over on the left, and I'm going to shut down my short-term chart here so we just look at 2 time frames for now. So I'm looking at multiple time frames all the time, and so drawing the basics is support and resistance, and you can see that this support resistance line right here where I have this arrow has now been breached to the upside. So former resistance now becomes support. I can't even pull that over there. Hold on. Let me see if I can do this. Okay, there we go. So we are now sitting on the supporting trend line. Of course, this is Monday, so this is a weekly chart. Okay, but we've got a little bit of room to get to the top of this trend line, which is about 1196. If you want to call it 1200, you could, but I would probably be cautious. And if I was going to put on an option spread, I might be looking to maybe sell the resistance at about 1200 as a possibility, but that's just me. As far as the S&P 500, you can see that we're now on the weekly chart retesting prior highs going back to April 22nd. And again, the W pattern, the long wicks on the candlesticks. And even though I've been saying for a long time that this trend with the cycle, where it appears as if we are making a rounded top, and I'm suspecting and expecting a potential pullback down on the S&P down to about 1820. Of course, first we have to get down to 1880. I mean, we're all the way up at 2107 as I speak. This rounded top is part of the bigger pattern that I'm watching. Potentially selling on the S&P resistance of about 2140. Now, going back and looking at my 3x3 grid, it is interesting to note gold. The actual futures contracts trading at about 1250 today. And so what I use and what I do is I'm looking at the GLD ETF if I want to participate in the equity markets with my typical equity account. Where since this is the beginners trading group, a la also the week ahead, where I pull together the fundamentals of the markets and charts and technicals and options. I'm not a big proponent of futures unless if you have six figures to play with, and I mean that literally, because the futures markets have been proven to be the domain of the futures brokers such as John Corzine and others who freely take clients' money with no repercussions. So, little shout out there. So GLD is considered to be a currency for those people who are trying to say that it's not something that you invest in. You can go ahead and appreciate it as a stock and equity. You can look at it from the perspective as a currency, or you can trade it like a stock with the GLD. So what I'm going to do is take a look here where you've got 122 up here, 126 is where I keep moving my resistance line to. And I'm going to go ahead and adjust this number here. So we have 126 as resistance on the weekly chart. We're trading at 118 right over here. And then we have real resistance up here at 130.150. Now the interesting thing is that if you take a look on the daily chart, notice, let's take a look at what type of a move. I'm going to go in depth here on GLD. And so if we've gone from 116 and then we spiked on the non-farm payroll to 118, that's a nice 2-point move in the GLD. And we're looking at potentially 126 as near-term resistance. Not only do we have a Fibonacci cluster, but we also have the 200-period moving average at about 127. So I'm going to open up OptionVue, and DGX is interesting to look at as well. GLD. Come on now. GLD. Okay. And type in your questions if you have any while I wait for this to load up. The volatility chart on GLD is not should not be considered the same as the volatility on something like a stock or some other things, because you're dealing with a currency. So just be aware of that. But the implied volatility 67 is nice. It's up there, and you can see the spike over the last few days on the blue line here, the implied volatility going up. Interesting that it shows the statistical volatility here going down, which I'm kind of surprised, because statistically this volatility looks like it's going up as well. I'm surprised that this number's here. Now with OptionVue, I can go ahead and look at the volatility. The implied typically is anywhere from 15, 16, and so on. We're right there at 16.2, so that's kind of standard. As far as the statistical and implied volatility, we're kind of within range, and that's verified by this blue line here, the current level, and we're right there, about 50%. All right. So what could we do? I'm going to go ahead and put a bias on this, and this is strictly for educational purposes, where I'm going to say, let's see what we could do if we were to sell maybe the far term 131 resistance. Let's see how much we could get between 131 and 128 if we wanted to sell resistance, knowing that we're trading at 118 now and just had a nice move up. So if I scroll up, I can see that 126, and I typically don't want to sell anything for less than 70 cents. So I'd have to go out to July, which is 40 days away, which isn't bad. That's about the proper time decay that I'd want if I was going to sell something. So I can sell the 126 call, trading at 118, and pick up about 70 cents. So let's go ahead and just play with this a little bit here manually, and then I may put it in Trade Finder. Let's say if I sell the 126 call, notice if I wanted to try and sell the 130, it's not going to make much money. Let's look out a little bit further. If I wanted to sell let's see, the 130s. Look at this. The September 130s is trading at 130. That's interesting. So I could potentially look at selling that. And now it's interesting. What I want to do is take a look at this. I can open up and analyze just that September selling the 130. I can close that. I could also go ahead and take a look at just the Julys. And I can superimpose the two of them. And of course, one's going to cost me or provide me more income in this case if I sell the September 130s. It's going to require about 30,000 to 23,000 in margin requirements, and this one will require also, the Julys will require also about 30,000 in potential requirements. The idea here is to put on a spread. So the idea here is where I might sell these for 70 cents, and I might go ahead and buy, let's say the 130s in July. Now, here's a 10% potential gain for 40 days. I could be putting up about $3,700 in maintenance with a $300 gain, and this is my break-even point with the dashed line at about 126.30, right about there. So if you have a firm belief, and this is not a firm belief, but I am saying that we do have resistance at about 126, right? So this option trade here expires on July 16th, technically July 15th. If we were to go ahead and hit 126, if I sold these for 70 cents, they would expire worthless. And if I bought these as protection for 37 cents, that would give me approximately $300, and that's about an 8% yield in 40 days. So there's one potential way of looking at the market. Now, of course, you have your transaction costs. So that's just one quick example of doing a spread based on support and resistance, selling resistance. The one thing I don't like about this trade is this. I never really enjoy putting on a trade where I have this much potential to lose when I only have this much potential gain. Okay, that's my gain, and this is my potential loss. Not a good risk-reward ratio. So if you're going to put on these types of spreads, and this is what I always see a lot of people using condors and some other trades, they're constantly adjusting their trades, looking to manage their trades. The brokers love the fact that you're in and out of a lot of trades, but you have to go into a trade like this with a strong conviction that we will not be going up above 126. And that's where, you really, and then you got to watch the trade. Any questions at this point? Go ahead and type in your questions. Let me clear this off. Now, let me go ahead and do something as well as we're looking at GLD. That was a manual trade that I went ahead and put on. OptionVue, come on now. Something that they've got here, looks like the latest update to OptionVue, they've improved the side-by-side analysis. It's taken them a long time to make this user-friendly, but when it works, or when you take the time to learn how to use it, it could be all the difference of your success of risk-reward and losing and winning. All right, so here we go. Now we've got the side-by-side analysis. All right, so what I want to do now is go to the Trade Finder, and I'm going to hit this Asset button, hit this button here. I'm going to update. With NetView the GLD data. All right, and now I'm going to go to my target, and I'm going to say I wish they would go ahead and put here price range where and put it in different perspectives. I wish I could say I want to sell resistance, you know. So if my price target is GLD is not going to go above 126 price range. So the high is going to be 126. And then T today plus 40. Wow, this thing is really acting flaky. They just did an update, and it just is not working. Wow. I mean, I typed this in, it's not working. All right, never mind. Okay. Let me go ahead and close the side by side. I think that's making this act a little bit flaky. Let me close the matrix. I'll reopen the matrix. And now again, selling the September 130s is always, that's not bad. You could pick up $1.30 as another option. Let's just use 10 as a round number, and if we were to sell 10 of the 130 calls for September, that puts $1.30 into your pocket, and from there we could potentially we could use that to subsidize a calendar where, let's say, we think that going out to January, gold could be coming up towards 130, or even December, 305, 260. What would this look like if I bought 10 of these? And this is all the what-if analysis here. Okay, and if I hit the Analyze button, so now we have a calendar where we have break-even points of about 120 to 140. Okay, so as long as we stay above 120, we'll be profitable. The peak profit would be about putting $1,800 in maintenance at risk, making approximately $3,000 at expiration. 70 days from now, it would be about a 1-to-1 risk reward at the peak of about 130. And so this is just a jumping off point as far as potential trades go for a calendar. But, you know, it's a good way to start when you're putting $1.30 in your pocket, way up at 130 as resistance, and then you can start working with your different possibilities. What do you think? Do you think that gold is going to be going up, down, or sideways between now and, let's say, July expiration, now and September, now and January? Do you think that the global markets are going to react with gold to the vote coming out in Britain? These are where you take, and what I do is I merge together the fundamentals, okay, of what could potentially affect the price of whether it's IBM, the S&P 500, whether it's gold or the euro, okay? You know, give me a reason in time. I know that there's going to be an election in Britain coming right up. And is that going to impact volatility on price within a certain amount of time? And then I'm going to look at it technically and say, well, I think that probably the British election to stay or leave the euro will probably put pressure on gold. And I think it already is. And so then we can search and employ techniques and methodologies to go ahead and speculate, putting the odds in our favor to potentially get a higher probability of success. My charts, I'm using Fibonacci's, high probability chart patterns, support and resistance levels, the basics of all charts, charting, trend lines, moving averages, indicators, employing strategies, and having a step-by-step methodology or two, understanding the tools, software, the order entry platforms, making sure that I'm calculating my risk and reward and my position size, and again, having patience, practicing my psychology, keeping it in check, having a plan. All right. Now, in a moment, what I'm going to do is show you, I typed in GDX. I was looking to put in GDX, which is the gold miners. Okay. And you can see the gold miners have actually done pretty good. They hit a bottom over here. And they're up approximately 140% since the beginning of the year. So that's not too bad, right? If you would have gotten into the gold miners. Notice the 200 period moving average is holding that price in check right there. And there's a Fibonacci level right here. So all of my charting and technicals right on target. But the interesting thing is that by mistake, I typed in DGX. And look what came up. For those of you who may or may not be aware of Quest Diagnostics, it's healthcare sector diagnostics and research. Now, can any of you think of something that might affect the healthcare industry within the next about 6 months or so? And can you think of anything that might be affecting the healthcare sector diagnostics, Quest Diagnostics, for example, which if anybody's ever gone for a checkup and have, certain samples and tests and other things done, you can see a pretty nice technical chart pattern of a W pattern right here. And we broke above this resistance level here, and we've now made a double top on top of this W pattern. And if you take a look at the stochastics and other indicators here as a supporting feature, in other words, is this a good time to buy, hold, or sell? That's when I start looking a little closer at my indicators. And according to this, my stochastics and RSI indicators are looking as if things are overbought. It's getting a little bit tired right now. And this is a weekly chart. My MACD indicators are also looking, obviously positive, but my histogram bars are showing a little bit of weakness. And the ADX indicator is properly showing the trend going up, but the blue line is basically flat. So the trend is up, but things are looking a little bit tired. That's the weekly chart. On the daily chart, you can see that this chart is just ever since, let me go ahead and cross this right here. Ever since '66, the 50 and the 200 moving averages crossed right here back in February 19th of 2016. The price of DGX has basically just been riding on top of the 20 period moving average right here. And for some reason, let me edit the 8 exponential moving average and let me make it, okay, so that is the 8 exponential right here. I stumbled across Quest. I wasn't looking for it, and a few things immediately came into focus for me, because a couple of weeks ago I did a live presentation in Fort Lauderdale on candlestick charting, and I was pointing out then, back on May 26th, that candlestick charting is very good at finding support, resistance, reversal points. And usually you need, well, not usually, but all of the masters that have taught me about candlestick charting, Steve Neeson, Steve Bigelow, John Person, all of these people who I know personally and have taken their workshops in depth, and they've presented to my groups, and I've flown out to different cities to see their multi-day presentations on candlesticks. Okay, I'm qualified to go ahead and tell you that one of the things they say is you have to use another indicator to correlate and help you make sure that we truly do have a inflection point, a reversal point, which is the whole point to me of using candlesticks. And if you look at the stochastics here, in this case for Solar City, you can clearly see that whenever we had these downward moves followed by a wick coming out, that the stochastics have been pretty good at pointing out that, yes, this is a good signal potentially of a reversal. It's not 100% guaranteed, okay, but it's a good sign. So this is what I saw earlier today as I was preparing for my day and looking at gold and looking at the GDX, which I'm sharing with you all now, is that with DGX, and this is a live chart, you can see that the stochastics crossed right here, and here we have what's considered to be somewhat of a spinning top, okay, but in the bigger scheme of things, you have a down run with a long bar down, closing at the low. Support was tested. The stochastics put in a change when we have this huge bar candlestick that completely engulfs and eclipses this candlestick on the way down, and prices never looked back since. So on the weekly chart, this would have been a fantastic signal to get long, looking backwards back in February, the end of February, beginning of March. Okay, so now what are the candlesticks saying? That we've had a huge run. The stochastics are showing overbought or a little bit tired. But if we go ahead and really look, notice that there was somebody that went ahead and made some type of a trade back at about 88. Look at the high. It's about $89. And typically when I see these high watermarks, I pay attention to them. There's a reason why somebody, unless if it was just stupidity, I'd have to find out exactly how much volume and everything. But it looked like there was a volume spike there. Here's your average volume. Take a look. Average 50 in volume is 7.4. You can see that right here, 7.3. I'd have to really do a little bit of analysis to find out whether this is an aberration. Again, I'm doing live analysis on this. This isn't a pre-canned presentation that you might find in a newsletter. But what I will show you is, let's look at the monthly chart. You can just see how this thing is basically, if you would have gotten into this about 16 years ago at $7, well, now we're up at $78. It's a nice run. Slow and steady growth. We could go ahead and take a look. I like to use FinViz for a lot of the fundamental and technical and insider information. And so with FinViz, I can see that it does pay about a 2% dividend, which comes out to about $1.60 a share, which is pretty good. I can go ahead and look at the insiders, and what are they doing? The insiders are kind of options exercise and selling. So, and what's the dates? March, May, April. A little bit of activity. So these guys are somewhat actively selling for whatever reason, but not a huge amount. Well, okay, 2 million, 3 million, 4 million. Okay. So these guys are selling into the recent move up. So they have their reasons, and you don't know what their reasons are for selling. Okay, it's something that I pay attention to. So that tells me, though, that what I'd like to do is look at DGX, which is Quest Diagnostics, something I stumbled upon by accident. I was typing in GDX, which is the gold miners. And while we go ahead and wait for the matrix to load, I want to remind everybody that we are on capitaldiscussions.com, and to remind you that my name is Jerry Furst, founder and director of Investors Education Network. And you can go to my website, Traders Education Network, or investorseducationnetwork.com. Click on the top banner and get a free 30-minute initial consultation with me to help you shorten your learning curve, move along the curve, and help keep you able to trade and invest with confidence so that you don't get stuck like a deer in the headlights, so to speak. And Capital Discussions does have me as one of the mentors, coaches and mentors. My forte is having people understand the charts and technicals and how to use OptionVue and how to go ahead and help you create a methodology. And my computer background, I've been using and training people on software for years. And so I can help you to learn how to use the charting programs, how to use OptionVue, how to use your broker if you're using Thinkorswim and or maybe Schwab. If there's a program you want me to help you learn, and if I haven't used it, I can help you learn it faster. If you're not comfortable or getting if you're not getting the proper customer service from their training department. But Capital Discussions, it's not a get-rich-quick program, but it will potentially help you along the way as you potentially want to enter into the financial markets, or if you're already in the financial markets, just remember all professionals have coaches and mentors. So capitaldiscussions.com, you can go over, hit the education button, and find out about the coaching and mentoring, or just go directly to investorseducationnetwork.com and click on that banner up on top. Where is that again? Right up here. investorseducationnetwork.com. Click on that banner up on top, and you get a free 30-minute initial consultation to see if it would be a good match of us working together. And let's go ahead and get back to my analysis that I did briefly ahead of time. Let me go to this slideshow. Current. And so this is the side-by-side analysis where I went ahead and said with DGX, let's say if I was to sell the July 75 call, and I could sell that for about $3.40, and I could buy the 80 call for 65 cents. Well, you can see the side-by-side analysis here. It's about a 1-to-1 risk-reward ratio, which isn't the best, but that's just a starting point. If I was to go out to live charts, and if I go back out to my analysis here, I would say that most likely my assumption, just very quickly for educational purposes, is that we will probably not be getting too much higher. Maybe we'll get up to 85 or so at the most. So I would look to see what could I sell up in the 80, 85 range, and potentially be expecting a reversion to the mean, or maybe a reversion to the 50-period moving average, which is about 63. So let's see what I could do here. Let's say that I think that we're overbought. And if I think that we're overbought, and I think that we could get back down to 63, well, let's see if I bring in a little bit more data. So out of the money puts, large, and auto strikes. And let's wait for OptionVue to reload the matrix. While we're waiting for that, let's look at the volatility chart. And we can see that the implied volatility is extremely low. It's only a 7. And while we're also waiting for that, let's take a quick look at DGX as far as when their earnings. They came out with April 21st, so that's April, so May, June, July. So the next one should be around July, August. So we are coming up on earnings, so you'll probably see an increase in volatility as we go into the next earnings. And really not too much volatility for the most part. You kind of see some spikes up and then dragging down, some spikes up and dragging down. Overlay the price chart. You can see that was July 23rd. So we're looking at the next earnings around the end of July. So if we looked at the August, and do we have weeklies on this? DGX weeklies, if available, are not showing up. Okay. And if I go out to Thinkorswim real quick and look at DGX, that is confirmed that we have no weekly options. The implied volatility, relatively low, and it picks up in August a couple of points. They're expecting about a 6-point move up or down. Okay, so having said that, 77 minus 6 is 70. So now I'm armed with some information and a bias for educational purposes that we could be seeing support at about 70 by July. So for 28 cents, I could just buy a lottery ticket, okay? And I could just say, give me 10 of those, please. And so for the princely sum of about $280, I could buy, where's my cursor? Come on. Wow, this is horrible. Come on. For some reason, my cursor is frozen. All right, I think this is a sign we're going to have to wrap up this video any minute. Type in your questions if you have any at this point. Okay, we looks like I'm not sure if you can still hear me or not, but it looks like WebEx, along with OptionVue, is giving me a headache. It looks like it's OptionVue, which is the culprit. Let's go ahead and bring up Task Manager. And I'm going to have to go ahead and shut down OptionVue and Task. All right, see, there's my cursor again. All right, so I know OptionVue just did an update over the weekend, and that's going to have to basically wrap things up. You're all welcome. I hope you enjoyed. I hope you picked up a few tips, tricks, and techniques. And sorry for the software issues. That's the difference between doing a live presentation with software versus having PowerPoint slides all set up ahead of time. But again, feel free to visit capitaldiscussions.com for all of their webinars and presentations. And feel free to click on the free mentoring 30-minute initial consultation on investorseducationnetwork.com and consider Capital Discussions coaching and mentoring to help you with your trading and investing activities. All right, everybody. We'll see you again next Monday, God willing, here on capitaldiscussions.com. Stay tuned. Over and out. Bye-bye.